Hello, and you're welcome to Global Business Insight, where we consider the main headlines all over the world and go a little deeper from a business perspective. The Australian dollar strengthened 0.5% against the US dollar after the country's consumer price index came in stronger than expected. Australia's monthly CPI index jumped by 4% in the year to May after 3.6% increase seen in April, complicating the central bank's path to interest rate cuts. Yesterday, we got US consumer confidence showing a muted outlook for business conditions for the job market and also for incomes. The conference board's gauge of sentiment fell to 100.4 from a revised 101.3 reading in May, still slightly higher than expectations. And coming out later, US new home sales will be out today. We also get the revised US gross domestic product for the Q1 out tomorrow, followed by the personal consumption expenditure price inflation index coming out on Friday. Still in the US, chip stocks were quite volatile. Yesterday, the Dow fell 0.76% after being helped by an Nvidia rebound. Nvidia surged nearly 7% at close yesterday. The Nasdaq was up 1.26%, while the S&P 500 also added 0.39%. Bitcoin saw its biggest gain in over a month, up 4.7% to around $62,000. San Francisco Fed President Mary Daly on Monday said policy has to remain conditional and we have to really think in terms of scenarios, and it's not helpful to be too definitive. Fed Governor Lisa Cook, again on scenarios, said one scenario that is that the possibility that persistently high inflation durably increases inflation expectations. Quite a few other scenarios we can't rule out. But there are still 3 months of jobs, inflation, and growth data ahead of the next FOMC, so a lot can still happen. And still on central banks, this time in Nigeria, the governor, Yemi Cardoso, says the Apex Bank is relatively pleased with the progress it has made in stabilizing the naira. Volkswagen plans to invest $5 billion with electric vehicle maker Rivian Automotive, helping the struggling startup while giving the German automaker access to the American EV company's technology. And in the UK, over 100,000 former and current Royal Mail staff will this week be asked to sell their shares to a Czech billionaire. Today, Daniel Kretinsky's investment group, which wants to buy Royal Mail's parent company, will publish its formal offer online and then formally start lobbying investors to accept the offer. It was mayhem in Kenya as 5 are killed as protesters continue to clash with police over discontent with higher taxes. Nigeria's central bank governor, Olayemi Cardoso, says the bank is relatively pleased with the progress it has made in stabilizing the naira, adding that excessive volatility may be a thing of the past. Investors have consistently said that what is more worrisome is not so much the devaluation, but the volatility that makes planning impossible and lingering difficulties in repatriating proceeds, hinting at inadequate FX supply. And the bigger issue is the still spiking inflation and whether continuing to raise interest rates is the right response. The governor in the interview predictably evaded signaling any rate trajectory, saying they will look at the data. If the next inflation data does not show a peaking as has been expected, then of course when the governor says data will direct whether they see further hikes or not, that could imply even higher rates, which will hurt growth and further impoverish citizens, despite the obvious reality that supply factors are playing a larger part in keeping prices up. The governor also said he would support further measures to build the country's reserves, including a Eurobond issue. Eurobonds are expensive, and servicing them crowds out fiscal space, pushing up deficits. The view of EVI is that the issues in the complex transition we're seeing in Nigeria requires time for the naira to stabilize, and fiscal measures and broader reforms need to be allowed to have their effect. It's perhaps wiser to soften or even pause on interest rate hikes despite price pressures. Beyond GDP, we also need more data on the impact of high rates on the economy as citizens and businesses groan under higher financing costs. Despite efforts and pleas by Kenya's President Ruto that he was reversing burdensome taxes, it was still chaos as protesters and police clashed. Police in Kenya killed several protesters and injured more outside the country's parliament in Nairobi. Parliament had earlier passed a controversial finance bill to raise more than $2 billion from taxes, including 16% value-added tax on bread and an excise duty of 25% on vegetable oil. Protesters also called on William Ruto, the president, to resign. UN Secretary General Antonio Guterres said the protest had been hijacked by criminals. Fiscal stress continues to plague African economies. Buffers were already thin when a combination of COVID relief expenditure and a tepid economy pushed debts higher, raising debt service burdens and leaving very little left. Revenue from taxes were eroded by barely growing economies, and a tradition of had to check excess and corruption must have made matters worse. Governments in Africa need to radically restructure and prioritize expenditure towards people factors, reining in wastage, overhead costs, reducing ministries and top-level staffing like special assistants. If the pains are spread to reduce evident extravagance by government and cut down of non-critical spend like offshore travel, sizes of contingents, citizens are more likely to accept to make extra sacrifices. But when you look at tax to GDP ratios of countries, you may be deceived to conclude that African economies, perhaps with the exception of South Africa, need to raise taxes. Richer and more productive economies in the top quartile GDP band like the US and China and India tend to have lower tax to GDP ratios. Economies where there is a heavy welfare spend on medical education and you have cradle to grave welfare systems like UK and the EU also tend to have high taxes, as these programs are very expensive to fund. But countries with high informal economies and weak tax compliance traditions like Nigeria have low ratios. Also, where there is high income inequality and the wealthy don't pay as much as maybe they can, you will also see low tax ratios. Countries with high levels of poverty and as such low disposable income will also tend to have low tax ratios. Developing economies cannot just raise taxes with a broad brush approach when wallets are already very tight. My thoughts are that certain themes are important. First, the long-term vision for cradle-to-grave welfare, education, health, and people-oriented program needs to be revisited to give people more hope that their leaders care. Africa should aim for a revolutionary uplift in welfare safety nets and have a vision to match best practices over time. With the possible exception of South Africa, most African countries, including Nigeria, are not doing nearly enough, and they spend their spend per capita on people are low. People must see that higher levies are in their interest. Second, better use of technology and improved processes to ensure everyone that should be paying taxes has a way of doing so easily is important. Compliance needs to be vastly improved by easier processes, also keeping tax simple, deterring tax evasion, and closing the loopholes. Thirdly, the top 5% in terms of wealth in many countries may be able to put more back, and you could actually find there's willingness to put more back to finance a revolutionary improved program for education, health, and like I said, cradle to grave welfare themes once these are clearly envisioned by leadership. Fourth, government can also explore more use of so-called sin taxes levied on goods seen to be potentially harmful to society and citizens like alcohol, tobacco, candies, sugar sodas, gambling, and so on. Fifth, there could be some scope to raise some excise taxes, but these should be the last things to be done. The tension between citizens and demand for better accountability of government could be a good thing, especially if it leads to getting better trust between government and the governed, as discussions on how to do better for people continues. Volkswagen plans to invest $5 billion to form a joint venture with electric vehicle maker Rivian Automotive, helping the struggling startup while giving the German automaker access to the American EV company's technology. $1 billion will be invested immediately and an additional $4 billion over time. The new venture will be equally controlled and owned by the companies and will fund development of next-generation battery-powered vehicles, leading-edge software. There is a win-win. Rivian will benefit from drawing on Volkswagen's deep purse, while Volkswagen gets access to the EV's startup software and EV architecture after years of struggling to compete with the likes of, say, Tesla. Recent years have seen a slowdown in the EV space as demand was depressed in a high inflation and cost of living crisis environment, which puts pressure on many EV players to slash their margins amid falling sales. Rivian shares yesterday closed up 8.6%. Investors obviously delighted by the news of that joint venture. The US subsidiary of one of China's largest state-owned oil companies was fined $14.5 million for misclassified export documents. PetroChina International America was said to have misclassified diesel fuel shipments as mineral oil for export transactions to Mexico. Still on oil, prices inched up during Asian trade despite a surprise jump in US stockpiles driven by geopolitical risks from the Middle East conflict and forecasts of an eventual inventory drawdown during the third quarter peak demand season. Brent, as we speak, is over $85 per barrel. And in Asia, stocks stuttered slightly higher in early trade as markets digested the latest Australian inflation read and also braced for the key US PCEI inflation coming out later in the week, and traders increasingly alert for yet another round of intervention by Japanese authorities. Sentiment was also capped by hawkish comments from Federal Reserve officials boosting the US dollar against the yen. And looking at Asian stocks, Nikkei 225 up 1.26%. However, we can see that the Shanghai Composite is also positive, 0.4%. Hang Seng, that's the Hong Kong index, is up 0.23%. Shenzhen Composite is up 1.45%. The South Korean Kospi also up 0.54%. Well, that's it from me on Global Business Insights. This is Bode Oshosani. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Please send your comments. Global Business Insights will be off for a short holiday break from next Monday, the 1st of July. We'll be back on Wednesday, the 17th of July. Thank you so very much for watching and following. Bye-bye.